Can using a line chart make your chart analysis a little bit easier? Well, that's the question we're going to explore today, so let's get going. Hey everybody, this is Forex Brizio. It is 5:45 p.m. on Saturday, March 18th. Hope everybody had a great week. And I'm going to talk a little bit today about line charts. Not something that you probably see all the time, but it is a potential way to do your chart analysis and look for areas on the chart without having necessarily the noise of candlestick charts. Okay, so what you see on your screen is a line chart, and of course is available in any trading platform. Where you can select whether you use candlesticks or lines or bars or any other type of charting. But in MetaTrader you have those three choices. So this is a line chart. So first of all, what is a line chart? Well, if you don't know, let's compare it to a candlestick. So in a candlestick, every candlestick represents 4 points of data: the open, the high, the low, and the close of that time frame. So if you're on a 15-minute chart, which is what we're on here, a single candlestick would represent the high, open, low, and close for that 15-minute period. Okay, which is why you have all 4 parts of a candlestick. Okay, so if you take this one right here, okay, so the wicks represent the high and the low, and then the top of the body is the close, and the bottom of the body, in this case, because it's a bullish candle, would represent the open. Okay, so you get 4 pieces of data in a candlestick. Okay, in a line chart, what you're seeing only represents the closing price only. Okay, not the open, not the high, not the low, just the closing price. So think of it this way: if you had let's say this check mark represents a 15-minute period of time. Okay, at the end of that 15 minutes, let's say price is right here. Okay, and then so let's say this is, just for make up a number, say this is 10 a.m. Okay, so at 10 a.m. okay, this is where price closes. Now the next 15-minute period opens. Let's say now it's 10:15. Now it's 10:15. Price closes up here. Well, your trading platform will just connect these two with a line, and that's it. And then the next 15 minutes comes out. 15 minutes later, let's say price pulls back a little bit. Then your trading platform is just going to draw another line to connect those points. Okay, so that's what a line chart is. That's what this all represents. It's just the closing prices, and your trading platform just keeps connecting each time interval closing price. Okay, and again, this happens to be a 15-minute. So that's what we're looking at here. Okay, so that's the difference between a line chart and a candlestick chart, or a bar chart for that matter too, because a bar chart also shows you all 4 pieces of data. And again, the line chart only shows you the closing price. Okay, so when you do that, this is what you get. All right, so now let's talk about how you might be able to use this in your trading. If you're kind of a visual person, sometimes candlesticks can be a little bit intimidating, right? If you just take this downtrend right here, you can see this went basically straight down. Okay, other than a little blip right here and a little blip right here, this is, you can tell, is a very, very impulsive move to the downside. Okay, you don't need anything else to tell you that this is impulsive. Okay, and then if you look here, all of this back up looks very corrective. See how choppy it is? Okay, and it's taking a long time for it to get up here. But if you go back to this as a candlestick chart, maybe not quite as easy, because now you're seeing lots of wicks, and you're seeing, these blue candles, and you're wondering, okay, what is that? And you're seeing this little impulsive move up here, and you see all these little candlesticks, and it can be very distracting to the eyes. Where if you just go to the line chart, this just pulls it right down. You can see this is a clear impulsive move, pretty much straight down from this high down to here, and then you can tell this is pretty corrective. Now you can see I have a Fibonacci drawn on here, and now let's just measure. So from this high right here down to this low, this took 19, we'll call it 20 15-minute candles, and it covered 212 pips. Okay, 20 15-minute candles, 212 pips. Okay, now to where we are now. Okay, it's taken 221 15-minute, well, I can't call it periods. We're just going to call it 15-minute periods because it's a line chart. But if it helps you think of it, you can say candles too. 221 15-minute periods or 15-minute candles to cover only 156 pips. So that's, I mean, not that you don't need that to measure. You can just see, how vertical this move is. But how few candles, a few 15-minute periods it took for price to get all the way down here versus all of this. It's literally 10 times longer for it to go less distance. It took 10 times longer for price to get up to here than it did here, and didn't even cover as much ground. Okay, so I put a Fibonacci on here, and this is just simple Fibonacci. I didn't pull this down all the way. Okay, so here we are. Okay, so I'm looking for potentially, and this is the EuroCAD 15-minute chart. I'm looking for potentially a resumption of the downtrend. Now, my favorite. Now, this really isn't just about Fibonacci's, and Fibonacci is nothing magical. But there are some times when it actually works out exactly. And so it's like anything else. It's a tool and it's a guide. Now, my two favorite Fibonacci retracements to look at when I'm looking for a potential re-entry to a trend and to get a really good fill is the 61.8 and the 78.6. Okay. Now, some people like the 50. The 50 is not a Fibonacci number. Okay, it's not. 50 is just a midpoint, right? It's 50% of this move from here to here. Okay, so, but it's not a Fibonacci number, so I don't really particularly like the 50. Now, if you have a really, 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 really strong trend going on, sometimes you're not going to get that big retracement. Sometimes you only get a 23.6 or a 38.2. But most of the time, after a really impulsive move that happens really hard and heavy like this, you are going to get a big pullback because you created a lot of imbalance here for all you supply and demand traders. Created a lot of imbalance, and there's probably still maybe some unfilled orders sitting up here. And so they have to push the price back up again. So this is a golden area for me to look for a re-entry, anywhere between the 61.8 and the 100% level. But the 61.8 and the 78.6 are my two favorite retracement areas. So, and if we just quickly switch back to a candlestick chart, you can see we wicked out twice here at the 78.6. Okay, which also, if we go back to the line chart, this little area right here, okay, also lines up with this. Okay, on the candlestick chart you can see it. So this is a nice little confluence area right now that I'm keeping an eye on. So going into next week, for this pair, I will be looking for some kind of bearish signal and a resumption of this downtrend. Okay, is what I'm looking for here. Now this might chop around in here, but you can see it's having trouble getting through here. But it's nice and clean. Now when I finally re-enter, I will look on the candlestick chart for the re-entry signal. I particularly like, in this case, a bearish engulfing candle. There's really nothing here as far as a trend line you could draw. So I'll be looking for a nice, bearish engulfing candle to hit, and that'll probably be my signal. Now, could this go further? Yeah, I mean, we could potentially go further up here all the way back to the 100. So I'm not saying this is where I'm going to enter. I'm going to look for some confirmation. But this area right in here is kind of a golden area for me right now. And if I get, a nice bearish signal, I will take that short, put my stop right up here, and hopefully ride this thing down. Okay? But the whole point of this, guys, is just to say that this is, to me, is a little bit easier to see all this with the line chart, because you can see that impulsive move without seeing, the distraction of the candlesticks and all the wicks and potential, a few counter trend candlesticks in there, and you can just see, when you see a straight line down like this where it's just close after close after close going down, and you get this, really hyperbolic move to the downside, and then all this garbage, which you can clearly see is corrective. Okay, so that is the EuroCAD. Euro dollar is pretty much the same thing. So here's the euro dollar on the 15-minute. Again, huge impulsive move down. We've had this drifting back up. Now we're up around the 61.8. Okay, we look at the candlestick chart. You can see where we are there. Okay, now again, this might continue to rally further. We might get up to the 78.6. We might go further. I'm not rushing into a trade right here. There hasn't been any signal here to enter. You can see I do have a little trend line drawn here. I'm not a big trend line user anymore, but this is a nice potential. If I do use a trend line now, I like to connect the two most recent swings when I start looking for a reversal. So, this is one recent swing. This is the second one. So I don't worry about any of this back here. There's really no way to draw a trend line from back here and make it work, because if you try to draw one from down here, I mean, this is what it would look like. It would come, way over here, and, just by the time you get this signal, you've already missed a lot of the move. So if I use a trend line, if I can connect the two most recent swing points, then I will do so. Now, if this thing bounces from here, goes up, comes back, retests it again, then I'll continue to draw the trend line out and wait for it to, get a nice bearish engulfing candle to close down here for the short. Now I'm expecting to see this either move from this area now, or like I said, potentially go up to the 78.6. You can see also on the line chart, we have this little blip right here. This could be a little supply area. I'm not sure, but if it doesn't sell off from here, this is probably back up in this area is more likely. Okay, because you can see again, if you're a supply and demand trader and you're looking at imbalance, I think this actually helps you, because when you see this line going straight through here, there's no supply zone here for price to kind of tap into, to pull back into and then go down. There is one here, and then there's probably one right here. So if price doesn't turn from this little piece right here, then I would expect it will keep going maybe all the way back up to here before we turn. So again, this is again where the line chart can help you kind of just visualize that. Look how impulsive this is. Straight line, imbalance, no real supply zone for price to tap into. But potentially there is one right here and back up in here. Okay? So that's another reason why I like using the line chart. All right? So here's one that already happened. This is the Euro GBP. And you can see we had this huge, again, hyperbolic move to the downside. You can see price came all the way back up. We had this little zone right here, and that's exactly where price tapped into and went back down again. Okay, and we went down and picked up 65 pips. Not bad for this pair on a 15-minute chart. That's, a whole day of price action. And again, if you measure from the top to the bottom here, this is 24 15-minute periods, 118 pips. Okay, whereas this move back up took 88 15-minute periods, so almost 4 times as long, and only 97 pips. So it took almost 4 times longer for it to get back up here and to cover less ground, which again tells you that this is definitely corrective. And you can see how choppy it is, and it tapped right into this one little blip here. So again, if you're a supply and demand trader, you're flipping on the line chart, this can help you really visualize and stand out where your supply and demand zones might actually be sitting. And this is one right here, and that's exactly where it went into, right here. If we put a fib on here, I don't know what the fib is. That looks like maybe a 78.6, and it is. Yeah, it went right to the 78.6 fib level right here, tapped into a supply zone, went down. So you have double confluence here, triple actually. Strong impulsive move down, 78.6 retracement, back into what looks like a supply zone, and boom, it went right back down again. And if we look on the candlestick chart in this area, there's your bearish engulfing candle. That's where I would have gone short. I did not take this trade. I'll tell you, I did take the Euro GBP earlier in the week on, I think, part of this move, but I didn't get this. All right, but here's your signal right here. Okay, this bearish engulfing, perfect. Go short right here at the close of this. Stop above the swing, and 65 pips down, and no problem. Actually, it's still going down, but if you'd be in it for about 65 pips if you were holding that trade right now. Okay, so again, another nice thing, confluence using the line chart. Now here's one on the Euro Yen. You can see this one had absolutely no break at all, so I'm not really sure where you'd find a supply zone here. But you can see where I have these lines drawn. I'm expecting that this thing, if we're going to get a nice pullback, we'll pull back at least, again, to the 61.8. It might go further. I mean, whoops, I don't want a line. I want a trend line here. You know, we might get something like this. I don't know. We'll see. So I just drew this in just for me to keep an eye out. Now, again, sometimes in a really, really strong trend, you don't get a big retracement, okay? It might only go to the 38 and just keep going. So, you know, this could be one that you miss. But right now, for me, the ones I'm willing to let that one go if I have to, because I'm looking for the bigger pullbacks because it's a better risk to reward ratio. And, you know, I can fine tune it with, you know, an engulfing candle or a trend line break. And if I can get somewhere up into this golden zone, the 61.8, 78.6 area, this is where I'm looking to potentially get short again. And again, there's not really any supply zone here, so I'm going to just be watching this for bearish price action. And hopefully this thing rallies back. And, you know, this would really take a day, maybe, you know, from where it is now up to here. Yeah, I mean, it's like a day and a half of price action on this pair. So, you know, that's what I'll be looking for on Euro Yen. Okay. Here's one in the opposite direction, potentially. This is dollar Swiss. You can see we had this impulsive move up, and you can see where I've drawn back down here as a potential supply zone. Now, this does not exactly line up with a Fibonacci zone, but it actually almost does, because here's the zone right here, right? A potential demand zone right here. And if I go back to the candlestick chart for a second, you can see this wicked into the 61.8. And now, so again, using the line chart, you're not going to see these wicks. But I don't care. I don't really need to, only just for a moment. So I still think this is potentially a good area, maybe to start looking for longs right in here. Okay. Now, if that fails and it keeps going down, then, you know, the next zone would probably be down around the 78.6. But you can see I have these purple lines drawn in as a potential pullback into this zone and wait for a bullish engulfing candle. If we get another swing high, like a little high before it comes down here, then I might be looking to put a trend line. You know, obviously there's no price here. You know, if it keeps drifting and, you know, bouncing off a trend line, then I'd wait for a trend line break on the other side and go along that way. So either using a trend line break off the two most recent swings, or just, you know, something tapping into this potential demand zone right here and an engulfing candle back up. Okay, so that's dollar Swiss. So that's just the other way. Yeah, this is one that's already happened. Dollar CAD, again, we had impulsive move up, pulled all the way back to the 78.6, right into this demand zone, and price rallied out. Okay, and I wanted to show you, yeah, now when the price is just trending like this, so this is the other thing, you know, okay, so this is a 15-minute chart of the Kiwi Swiss, and you can see it's just been grinding higher, okay? So there's not, you know, you could trade this, but you really wanted to be in the trade before any of this started. So here's a potential area right here. We had an impulsive move up. It's not very big, but this is not a big pit-making pair anyways. Impulsive move up, retracement, basically 100% retracement, and then, you know, price went up. So anywhere in here would have been, you know, a good entry point on this, and then you could, if you were in this, obviously was the ideal place to get in. You could have put a little trend line across these last two swings right here, and then gone long anywhere in here. So again, strong impulsive move, not a particularly big one, but yet it is, you know, straight up, tap back into basically the 100% retracement zone, and then trend line break and up, and then nowhere in here is there really an entry using this methodology, because you can see we're just grinding higher. So hopefully you were already in this if you were going to use this method. Okay, so that's an example of, you know, another entry, you know, not as obvious but clearly there, and then just what price looks like as it's grinding higher. All right, and you know, same thing here. So here's an example of a very short retracement. So you can see an impulsive move up. This is the Aussie CAD 15-minute. We had this come up, and then we had this little pullback, and I measured this before. This is a 23.6, which is a very shallow pullback. but it did hit the 23.6 and it kept going. So this is probably one where maybe I would have just missed this one because I'd be waiting for a bigger pullback, unless I happen to be watching it and saw this trend line break. But, you know, for the little bit of gain this is, you know, if you went long, say somewhere right here, it's 23 pips. You know, maybe I would have just let that one go, or I would have missed it because I would have been waiting for, you know, maybe potentially something back down here and then have it go up. But that didn't happen. So sometimes you are going to get these really small retracements, and then price will just go, you know, like I said, either the 23 or the 38.2 fib level, and that's fine. If that happens, then, you know, take it if you want, if you happen to see it. If not, then you just let that one go by. So, all right, but yeah, so I'm not going to beat a dead horse, guys. Here, you get the point with this. So again, you can just throw your line, and again, I do want to mention you can do this on literally any time frame. My favorite time frames to look at this type of setup is the 1 hour and the 15 minute. Those are just two. The 1 hour would be a nice swing trading time zone time frame, and the 15 minutes, you know, also potentially a swing trading, or, you know, either a long day trade or a swing trade on the 15 minute and the 1 hour. And if you look at enough pairs, you should get, you know, at least a few setups a week. You do have to be patient because, again, this is what you're looking for. You're looking for an impulsive move and these retracements. And the deeper the retracement, the better. But at least the 61.8 or the 78.6, if there's some confluence with a potential supply or demand zone, you know, wait for your bearish or bullish activity to confirm the trend starting again, and there you go. But using the line chart can take some of that confusion and some of that noise that the candlesticks can be throwing at you with the colors and the wicks and different size candles, and, you know, kind of making you sometimes second guess what it's actually doing. With a line chart, just tells you, okay, here it is. There's a really strong move here. This is obviously very corrective. You can just see the contrast between straight down and then chopping higher like this. And I should be looking for a potential short entry on this pair at some point, and maybe soon. So, all right. So that's it, guys. I'm just going to leave it there. You know, something a little bit different, because I don't hear too many people talking about trading with line charts. You know, it's usually ends up 99% of the time being candlestick charts. For those that are using traditional charting, I know there's videos out there with Heikin-Ashi and Renko charts, and I don't use either of those. But in terms of traditional charting, it's usually either, you know, candlesticks or bars, and 90% of the time it's candlesticks. So I thought, you know, that this is a different video using the line chart. So yeah, so go back in your charts, take a look, and again, guys, you can use any time frame you want. It doesn't matter. Obviously, the shorter you go, the more noise there is, but you can see these type of setups literally on any time frame. So play around with it, take a look back in your charts, and the number one thing, guys, is be patient with this. Don't try to second guess it. If it's not obvious, you know, you don't want these like little tiny little, this is not an impulsive move. This is just a little, how small this is. This is what I really want. I want to see these big ones that like take up a lot of my screen here. And you're not going to get a ton of them, but that's why you have to be patient. But you can also find them on any time frame. So if you do really want to find something, you go through all the time frames on, you know, whatever pairs you look at some point you're going to find one. It's just a matter of what time frame it's on, how long you're going to have to wait for the setup to play out. So, but this is what you want to see, guys. You want to see the longer and more hyperbolic these moves are, the better. You want to avoid these little dinky little things. These are not impulsive moves. Okay, you want this type of stuff where it's taking up a good chunk of your screen, and then you can clearly see the correction going back the other way, and, you know, then you just go from there, and you just be patient and, you know, wait for that correction to end. And again, for me, it's at the higher Fibonacci retracements, supply and demand zones for confirmation, and then I'm waiting for bearish or bullish engulfing candles or recent trend line breaks, if it makes sense to draw a trend line. So, all right, guys, any questions, comments, please leave them below. Smash that like button if you like the video. Really appreciate it. And hit the subscribe button if you just found the channel for the first time, and ring that bell notification so you get notified when I post new videos. All right, guys, I will talk to you soon. Have a great rest of your weekend, and we'll catch up soon.